Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday, and we're now at the 12th of September, 2023. So today was all about Apple. We might as well just go there and take a look at what this chart looks like. As you can see in Apple, the market today finished down 1%, down $1.88. It was a little bit of everywhere. Tried to rally early in the day and couldn't hang on to that in any manner, all right? But you will see, this is a weekly chart, so you'll get to what I'm talking about in a minute here. As for the weekly, you still have lower highs, lower lows. When we take a look at the daily charts, you got lower highs, lower lows on that. As we come in, you can see you're under the 18-day average. You try to rally today. Now, today's high in the market was 180.12. If we step back and we look at yesterday, you could see that the high of yesterday was 180.30. It never did clear that, and it was able to come down. Now, a positive could happen if, and that's an if, the market gets up and closes over 180.24. And I know you'll say, well, Ira, you're splitting hairs there. Actually, you know, that is the key for the market to get over. But really, the settlement has to be the settlement, 180.61 or better over the 18. And then I, as a purist of moving averages, would say, it's really got to get over the 100. In other words, where's the resistance? There's big resistance now, 180.61 to 181.17. The combination of the 118-day average of closes, trend down, bias down. If the market wants to let go from here, another $6 before you find major support at 170.57. And then if that didn't hold, and I think it would, but if it didn't, and you could stay under there a bit, then the 164 area, the 200-day average of closes. So did Apple's product lift the market? The answer is no. The price action, you're in oversold territory. The trend is down. I've given you the resistance points. You'd have to close over them, and then I'd have a different attitude on the market. Now, they did come out and they raised the price by $100 on their Pro series. They held the line elsewhere. People thought these prices were going to go up dramatically. They did not. We have to wait overnight and see what people think about it. And when the first ones get out in people's hands, the reviews, are people going to rush to it? Certain analysts say yes. I've seen analysts that say no. It's a nice refresh, but is it really something new? Obviously, from what I read and listened to, because I did watch parts of the release, it appears that the new camera is quite a feature. It appears that the charging ports are a nice new feature. And it does appear that in the Pro Max series, that the new chip is going to be something. But I'd like to see it tested and find out if people are going to run out and do something. Now, what will the sales items be like? Now, listen to what I mean by that. Your carrier. Let's assume you have, from what I understand, an iPhone 11 on up and you want to trade up for the new 15. What is the deal you're going to get? How much will you get towards it if you do so? I don't know, but I would assume that there's going to be a big push to get that done. So marketing is going to be very, very important. In Rivian, the market closed up another 17 cents. And are we embedded? Now, embedded occurs when the slow stochastic numbers are going sideways over 80 for at least several days in a row. You have it today. You had it the day before. You had it the day before. You had it the day before. You've been embedded. So on the breaks in this market, and there will be some, I look to see if the pros will buy. I think they would be out if the red line here closes under 79. The reading is right now 84.99. And until then, I'm looking for the upper Bollinger Band as the next resistance. Now, before I get into all the others, and we got a lot of ground to cover here, I want to remind you, we're going to have the live webinar Thursday. I will open it up for everybody to join in at 12:15 p.m. Central Time. I will begin at 12:30. I will end 20 minutes later. If you didn't receive by email today, this morning, an invite means you're not on my mailing list. And it means I have no way to get it to you. How do you get in then? Well, you take your cursor, move it to the top up here, and at that point, you'll see an icon. Give it a click. Fill out the form. You will get back from us an email. It'll either go right to your email or your spam area. You know, it depends on how you've set up your inboxes. Look at it. You have a link in there. It will tell you what you click to get in, your passcode. You do need your passcode to get in. And one other thing, if you have questions for me, it's an ideal time and place to do them. Right in that email from us, you'll see a link. Give it a click. Type your question. It comes direct to me, and I'll prepare the charts for it. Pretty simple. All right. Let's go back to what we've got here. So UGA, the gasoline fund, well, all I see are energy prices continuing to go up. The EIA came out today with another report. That's the Energy Information Agency, and they're coming out and telling us, folks, crude oil is going to be in shorter supply the rest of the year, they said, and that could carry the products to higher prices. They do talk about the fact that gasoline usage isn't as big as it was, that cars get better mileage than they used to. They go on, and I cover that in pretty good detail in tonight's report that I sent out to my clients. It'll go out actually after all this. Higher lows, higher highs into the Bollinger Band and the financial services. This has really come alive. This is a market that is suddenly saying, I am better. My health is in pretty good. I'm impressed with it. The trend is up. It's a little bit overbought. You got a 73 reading, but on pullbacks, you have a lot of support back at the 34.22 area. It's only 50 cents lower, so I don't want to give you the impression it's far away. This is a market that stays very range bound. You can see the upper Bollinger Band 34.80, the lower 33.63. It's not as though it has tremendous volatility. That ended when this market moved here from roughly the $30 area to 36, and since then, just been trading very much sideways. In XLI, we have a higher high, lower low, and you're oversold. I don't see anything to do in that. In Disney, I don't think you're going to attract a lot of investors just yet. You lost the embedded reading. If we take a look at this together, you'll see it right over here. Here's the market, and numbers are still underneath 20. Still there. You lose it this day. Goal is to get to the 18-day average. It did it 1, 2, 3. RSP, and I thank you. One of our viewers wrote me and told me that there's two versions of this, and RSP has more volume, much more to it, and he is right. I checked it, and I saw the float outstanding, the daily trading range, so everything's better. So we'll just switch. It's the same. It's how they work them, all right, and the different ETF services and the people that bring them out. This is the better one. So we'll stay with RSP, but I do want to do the equal weight consumer discretionary ETF, and we have lower highs, right, but higher lows, actually. This is a market trying to go into a downtrend, hasn't quite made it. A lot of support coming in right through this area. In the home builders, we, with today's action for the first time, got a sell signal. Haven't had this, in all fairness, since way back here. So this is since August. Now, this is the first one. So I think the pros will sell at 80.97. They won't want the market to get over the high that you made yesterday, and that high was 82.79. If the market can push lower down here. So why would this be happening? My instincts are tomorrow's CPI report. The trade is looking at early in the morning, we're going to get to CPI. The market is expected to see a jump in CPI, both in core and headline number. How much, how the market reacts to it, what it reads immediately after. Is it going to say, oh, that was just an event that happened because of so, and it's going to slip right back? Or is it a hard enough number to get the market going? Then the trade is deciding the PPI number doesn't seem to be the next big number. It's going to be retail sales on Friday. That combination they'll look at. European Central Bank comes out Thursday morning. What are they going to do with rates? They have stagflation written all over their economy. Do they raise? Do they sit tight? What do they do? It is a toss-up now. It wasn't a while ago, just 4 or 5 days ago. It is a toss-up suddenly. On the energy sector, well, the market, as we can see here, interesting. Both numbers over 80. I always go back to that embedded reading. If you take a look, you weren't embedded here on Monday, but embedded there, and embedded there, no. So all we've had is an overbought market that has never had the necessary requirements for me to call it embedded. It keeps pushing on this number higher. Very difficult to get involved in something like that. In the gold market, new sell signals came out today. So until we take out Monday's high, you have the lower highs, lower lows. You're opening the door for the possibility of the lower Bollinger Band unless you get back over Monday's high. When we come to SLV, lower highs, lower lows, staying under these key averages, but so oversold, I don't know that you're going to attract a lot of new money to the short side in it. In the copper market, the trend is down, but the bias is up. Bias is determined by the market's relationship to the red line, the 18-day average of closes. If the market is over that, you say the bias is up. If you have a sell signal on the swing line, but the bias is up, the two stand together and don't do anything. More important to me is what I was telling you. I see stiff resistance at the 200-day average, in green, the 100 and the upper band. You didn't quite get up there to test them. You did the two of the three right here about a week ago, and now you're slipping back down. A close underneath 37.16 would be a bearish signal. In TLT, well, it's going to be impacted tomorrow. Come on. The CPI number is going to give you an idea. Is the Fed on hold? Is the Fed going to go this time again? Then traders, even if the market decided they're going again, immediately they'd say that's the last one of the year. That's how it is. So whether this is that or not doesn't matter. That's the bigger question that we're going to see, and how the market reacts to all this is going to be super important. If stocks don't immediately rally off of a CPI the traders say doesn't warrant another rate hike, and that's it, the Fed is through, what's going to make the stock market go up? That becomes the bigger question we all have to think about. In UUP, we have a market with the dollar that is just staying super strong. You can see how the market is doing here. If the red line closes under 79, I think the bulls will bail out. Until it does so, they're looking to get back up to the 29.41 level. And in FXE, you have a bearish embedded reading. What will happen if the European Central Bank stays pat? Is that bearish for this market, bullish for the dollar? What happens if they raise interest rates? Define what something has to be done. And what if the U.S. at the same time, week after, goes with an interest rate hike? Very quietly, by the way, the week right after we go next week, the Bank of England has to make a decision. So this gets pretty hairy over the next few days. Hairy enough to have a good meeting this coming Thursday? You betcha. So I'm hoping to see you there. Remember to just move your cursor to the top, give it a click, sign up, write me whatever you want me to cover. I'm starting to get the charts tomorrow together for the meeting. I will talk to you all tomorrow. You have a good day.